Let's talk about the possibility of lifting these tariffs, because one of the questions is, what difference would it make? Early on today, if you looked at the markets, they moved up. The equity markets moved up. Reportedly on this news, they were at least thinking about that possibility. Right now, they're well up, although on other news as well, like the S&P's up 1.9% as I look at the Bloomberg right now. Would it make that much of a difference if they did lift the tariffs?
So I think it's a step in the direction of trying to have better relations with China, and so I think that's probably why the markets liked it. In terms of inflation, it's not going to have much of an impact. This is a big tariff on a lot of what's imported from China, but overall imports from China are not that big compared with the overall U.S. economy. So although it would have a small impact, that probably would take time for it to actually be implemented, it's not going to make a big dent in inflation.
So just to pick a date at random, like by the time of November when there's a midterm election, would it make a big difference by then?
Why'd you pick that? Yeah, I think the impact would be relatively minor. I think other issues related to lockdowns in China, related to broader supply chain issues, the war, sanctions, those are much more first order issues. And of course, Fed interest rate policy is first order issue too.
Well, let's talk about Fed interest policy specifically. I mean, one question I think a lot of people are asking is, are we going to have to choose between recession on the one hand and letting inflation get out of control on the other? And let me be very specific, Randy. If the Fed really means they need to get that down to 2% within the near future, doesn't that mean almost necessarily they're going to have a recession?
What's so funny is people are rending garments now over the Fed getting to 2% interest. But I'm old enough to have lived through the late 1970s. Last time inflation was this high, and interest rates were in double-digit levels. So if the Fed only needs to go to 2.5%, I actually don't think that means that recession is inevitable. I think there are a lot of headwinds. The economy is getting kind of a 1-2 punch. You've got all the sanctions, the war, and the uncertainties and the challenges that brings. You've got broader supply disruptions, and you've got the Fed raising interest rates. That's a tough time for the economy to be going robustly growing. But and a recession is not inevitable, but I do think the probability is significantly higher when you've got this 1-2 punch.
So, Randy, I'm going to exhibit a degree of impatience that you'll find amusing as an economist. You'll think, well, why don't you just be a little more patient? When are we going to see the inflation come down? I mean, some people think it's maybe peaking right now. We've got core PCE coming out this week. Do you think we'll see any reflection of a diminishment of inflation this week?
We might see a little bit, but I think inflation is still going to remain quite elevated for quite some time. Hopefully, some of the supply constraints will be coming down in the second half of the year. Hopefully, some of the tightening of financial conditions will lead people to be a little bit more cautious about spending, but I think there's a strong inflationary momentum that's there now, and this is why the Fed needs to act boldly and quickly to make sure inflation expectations don't get out of control, and then it becomes baked in, and then the Fed has to go back to those very high levels, hopefully not quite as high as in the late 1970s, early 1980s, but much higher than anyone would like.
So that's helpful to talk about the timing, not just the levels here.
Yes.
What is the trade-off there? If they move more early, what does that buy them?
So in my view, if they move more rapidly earlier, they won't have to move quite as high because they will have ensured that inflation expectations don't get out of control. They haven't become unanchored yet. They've moved up, but they're not out of the ranges where the intermediate to longer run inflation expectations haven't moved out of the ranges where they've been over the last decade. Short expectations, sure, much higher. So if they can make sure that those expectations those longer term expectations don't get out of control, I think they need to move quickly now, and they don't need to move as much later on. And so that's better for recovery. And if there is a recession, we'll make it less deep, so we don't have something like what happened in the early 1980s.
I understand the Fed is data dependent. They tell us that again and again and again. I take them at their word. But do they have, do you think, a number in the back of their head about what the destination is on rates?
I think there's a lot of different points of view on that. So as you can see, when they put out those infamous dot plots, just over the last few months, they've gone from having virtually no rate increases this year to getting to 2.5% this year, and possibly significantly more, 3% or so in the following year. I don't think that I think they would prefer not to go beyond 3 to 4. and I'm hopeful that they don't have to, but they might need to if inflation keeps up and inflation expectations start to move up.
One more here, Randy. I have read that economists tell us that there is a sort of a natural relationship between the peak of inflation on the one hand and unemployment on the other. That is to say that after inflation peaks, historically what's happened is there's something like a 12 to 18-month lag, and then unemployment really peaks. Is that true, and what kind of unemployment should we be expecting?
This is the classic long and variable lags of monetary policy that Milton Friedman, a great University of Chicago economist, spoke about. There is a lot of uncertainty about how quickly monetary policy has an impact on the economy. It has an impact with a lag. The exact lags are hard to tell, and especially where we are now, given all the supply shocks, given that we're starting from we're nearly record low unemployment. Hard to say exactly what it would be, but it's not immediate, and it is going to play out over time.